Good evening. This is a cryptographic hardware wallet. It's also what the bank of the future looks like. And soon, this hardware will be miniaturized, embedded into every one of our mobile phones, and will enable the frictionless transfer of any unit of value between two people without the need for a trusted intermediary like a bank or a government. And that interchangeability allows us to do some super interesting things in terms of creating microeconomic incentives embedded deeply inside products and services using a process called cryptocurrency tokenization. Now you might wonder, what has cryptocurrency got to do with economic incentives? Well, the reality is that a fully functioning economy requires demand to meet supply at a market price that keeps factors of production fully employed. And to coordinate that kind of activity requires, in the absence of some massive control, economic incentives. And it's in fact the way that we've been best able to deal with matching demand with supply. But the economic incentives that we have at our disposal today, unfortunately, date back to between the middle of the 15th century and the middle of the 18th century, the period of merchant capitalism. And so here we speak about, for example, venture finance or loans that attract interest. We talk about shares, but perhaps even other things like sales commission or revenue share. And there have been some changes, like, for example, loyalty programs, gamification, and perhaps even advertising that incentivize us to act in the interests of the economy, but they're not particularly effective and frankly need a little bit more work. You see, the challenge is that most economic incentives actually incentivize us to act in our own self-interest, to accumulate wealth for ourselves, to spend, to consume. And what we're looking for is economic incentives that actually prevent something called the tragedy of the commons. This idea that those who choose to consume should have to reimburse those who choose not to consume a common good. Fortunately for us, in 2009, a new technology was introduced called Bitcoin. And what Bitcoin enabled us to do for the very first time is to transfer value between two parties without the need for a trusted intermediary. But perhaps if we had to understand a little bit more about the technology, we would understand how does that enable us to create economic incentives. So first, if we wanted to take a statement, like for example, the person that is able to prove cryptographically that they control this Bitcoin can spend it, and we had to make it executable on a blockchain and cryptographically secure it, it would actually look like this. That is what a Bitcoin actually looks like. And if we wanted to spend that Bitcoin, what we would do actually is we would be instructing the servers on the Bitcoin network to include that transaction in the next batch of transactions that they were going to process. And that batch of transactions that they were going to append to the end of the previous batches of transactions would in fact make that network more and more secure in such a way that the very first transactions would be the most secure, and you would never be able to change those transactions in any way. And this is called the blockchain. But if you wanted to do something different than, say, transfer Bitcoin between two people, you still have other opportunities to use this technology. So let's say we wanted to transfer something associated with a Bitcoin, and we said in this particular case that the person who is able to prove cryptographically that they control this Bitcoin also owns a specific white Ford Focus and can spend both at the same time, then we might in fact be able to execute that contract on a blockchain after securing it, and it would look like this. And that we call a token. And there are two different types of tokens. The first is a security token, which infers ownership. So for example, a share, a government bond, but perhaps also ownership of land or even a car. Security tokens also enable you to participate in a governance structure. So, for example, a shareholders group or a board of directors. But what they also, and quite uniquely, enable you to do is to transfer or convert these tokens of different kinds into other tokens, into cryptocurrencies, and ultimately into money. In the future, security tokens will be regulated financial products. The second type of utility is perhaps best described in terms of an example, and that is called the utility token. So if I was a smoker and my medical insurance company rewarded me with a token every time that I decided to forego a cigarette, and I was able to convert those tokens into a discount on my premium, very interesting things start to happen. So as you can imagine, a utility token does not give you ownership rights. It doesn't allow you to participate in a governance structure, but it does allow you to participate in very targeted micro incentives. And it also is highly liquid, as are security tokens. So you can convert it into other crypto tokens, into cryptocurrencies, and eventually even into money. And if you think that what I'm talking about today is something that is happening in the far future, then I need to tell you right now that by the time we get to the end of 2017, companies around the world would have sold almost $2 billion of these tokens in something called an initial coin offering, or ICO. It's happening, and it's happening very quickly. And perhaps I can best explain this by taking you through an example or examples of how you might deploy these kinds of tokens into, and how we are already looking at deploying these tokens into the real world. And at this point, I'd like to introduce you to Emmanuel from Tanzania. And Emmanuel wants to invest in an interesting new opportunity in Rwanda called hotstartuprwanda.rw. And so he takes his Tanzanian shillings, he converts them into Bitcoin, he converts the Bitcoins into a cryptographic token that proves that he has an ownership stake in Hot Startup Rwanda, very much like a share certificate. 3 months go by, and Emmanuel decides that he's still super excited to be an investor in Hot Startup Rwanda after receiving his first investor report. A further 3 months go by, and Emmanuel starts to question whether or not this is the kind of investment that he wants to be involved in. And finally, 3 months go by, and he receives his third investor report and decides that actually, this is not the team that he wants to be investing in. So he takes his token that specifies his ownership stake in Hot Startup Rwanda. He lists it on a crypto exchange, converts it into Bitcoin, and sells his Bitcoin back into Tanzanian shillings, both realizing the initial investment and a gain associated with him being invested for those 9 months. But he doesn't just invest into very interesting startup opportunities. What he also does is he joins a hot app Mauritius.mu. And he decides that this new chat app is just the thing that he wants to get into. And the first time he logs into the account, the platform developer actually rewards him with 100 hot app tokens. And then what he does is he adds his friends onto the platform so that he could chat, and the platform developer rewards him with a further 200 hot app tokens. Then Emmanuel actually ends up spending hours chatting on this particular chat app, and the platform developer once again rewards him with a further 200 cryptocurrency tokens. And finally, because he's had so many people that he's led to joining the platform, he actually gets rewarded with a further 200 hot app tokens. But Emmanuel has actually spent so much time on the platform that he forgot that his mother told him that she needed him to transfer money to her in Rwanda so that she could pay for her medication. And so what Emmanuel does is he lists these 700 hot app tokens onto a crypto exchange, sells them for Bitcoin, and converts the Bitcoin into francs that are deposited into his mother's Rwandan bank account. So as you can imagine, this highly targeted, highly liquid micro incentives really start to change the way that we can incentivize behavior. And what's interesting about this technology is that it's particularly exciting for the African continent, because Africa is a mobile-first continent. African people are used to engaging in economic activity on a mobile device, whether it is mobile money, microinsurance, and others. And so this is one technology which is transformational, which Africa can use to create an edge over developed markets. And I can't wait to see what we do with this technology in Africa. Thank you.
I have a question.
Sure.
Yeah. You mentioned earlier that the size of the ICO market was growing at a fairly large rate. And you also just spoke to the potential within Africa for cryptocurrencies, distributed ledgers, and so on. How big would you describe this market? How big would you describe this market potentially? And why do you think it's important that countries that may not have sort of legacy systems move into it as quickly as they can?
So I think that what we're creating here is a little bit like the next version of the internet. The first version of the internet was all about creating frictionless transfer of information. The second version of the internet is all about creating frictionless transfer of value. And so we don't get the option of saying, actually, this technology is not suitable. Eventually, everybody must deploy this technology. And I think that it's so transformational in nature that it is just a question of time before everybody adopts blockchain to do a myriad of different things.
Do you think that traditional financial institutions are at risk if they don't jump in? Or if I rephrase the question, is this an opportunity for startups potentially to disrupt the institutions that some would argue are not allowing African countries to develop as quickly as they could?
I think that this is ultimately a technology that enables financial inclusion. So it's specifically seeking to serve the people that are not served by the current financial services ecosystem. I would like to believe that this technology works together with existing systems and rather serves people that are not adequately currently served. I'm not sure that it ever fully replaces a bank, but I think what it does do is, in my experience with the banks so far and speaking to them, is they start to question what their role is in providing financial services when they no longer have to play the role of a trusted intermediary and where software and hardware can fulfill that function.
Well, thank you again, Llew, and I'm happy you came to the TED stage.
Thank you.